Hello, everyone. This is chapter 4. It's going to be about banking. That means money coming in and money going out. Here are the learning objectives. We'll be looking at the check register. We're going to view the check register, and you'll learn how to drill down to the source documents that make up that transaction. Also, you can use the check register to add new transactions. As far as money coming in, we'll be recording bank deposits, and money going out, we'll be recording expenses and recording checks. You'll also learn how to connect your bank accounts and credit card accounts to QuickBooks, right? So we're really not going to do that, but we're going to show you how to do it. The advantage of hooking up your bank accounts and credit card accounts to QBO is that your statements with all the transactions can be downloaded right into QuickBooks. And then QuickBooks is going to try to match those transactions that are on your bank statement, and they'll offer it to you. And if you say, yeah, that is a good match, you hit match. If there are some transactions on the statements that you don't have, well, you can add them. Okay. We'll also be talking about accounting essentials, just banking in general. As far as our sat nav, we're focusing in on transactions and specifically banking transactions, such as making deposits and writing checks. The check register tracks all banking activities, bank deposits, money into bank accounts, and bank transfers, bank checks, which is money going out, and even enter and paying credit card charges. That's money out of the bank accounts. Notice here that on your bank or your check register, we call it bank register here, but you see the type. These relate to the source forms that make up that balance. So if you see here a payment to Carol Medea Design for advertising and marketing for $2,000, well, you can double click on that expense and it will take you to the expense form. And you can see the transaction that comes from. Okay. You can also use the check register to add new transactions, and you would do it here. You just go ahead and click the down arrow, and here, if you want to make a deposit, you just click on this and make your deposit. It's interesting to note that some small businesses may use only the check register. Yeah, that's crazy, isn't it? Because it's such a powerful program, but people that don't know much about accounting may be intimidated by all the features, but they know this because it looks like their traditional check register. There are three main ways to use QBO to record money coming in. The first one is sales receipts. And as we discussed in chapter 3, sales receipts is used to record cash sales. The second way to receive money is through receive payments. That's where you invoiced your customer and now he's paying you. So you're collecting on his account. That's receive payments. Now, in this chapter, we're going to focus in on deposits that are not related to customer sales. What would they be? Well, they would include investments from company owners. So if you receive money, you would, in your bank deposit, you would well, to get to the bank deposit, you would click on the create button. Remember, it's not new anymore, it's create. But you do create and then bank deposit, and then you would enter in the form here. So you've got uh, checking 1001, the date, and then here it's, well, who's it from? Well, if it's from the owner, you'd put the name of the owner. The account, it could be common stock, or it could be capital account if it's a sole proprietor. If it was a cash received from a loan, then the account would be notes payable, that type of thing. So that's how it kind of works. There are four main ways to use QBO to record money out, and they include using the expense form and the checking form. Here, you'll be paying your bills immediately. And this is what we'll be doing in Chapter 4. Now, later on in Chapters 6 and 7, we'll be doing these two, where that we will enter a bill, and that means we owe somebody, like a vendor, and we have accounts payable, and then we'll pay the bills, right? And finally, this one, this is the same thing as pay bills, but you're going to be buying inventory, and there's a way of doing this. So you don't have to worry about 3 and 4 right now. We're just going to be doing 1 and 2 right here. We use the expense form if paying a bill immediately using cash, check, or credit card. It's the most versatile form. Matter of fact, we have a separate item here for a check. Well, you can, write checks right here in expense. This one is just for checks, but you can do the a check right with the expense. Okay. Again, we don't use the new button. We're going to use the create button. That's the new platform. Here's what it looks like. You put in who you're paying and how you're paying it. Like I say, you can do cash, check, or in this case, we're doing Visa credit card. You put in the payment date, and the method is in this case, it's a credit card. Down here, you're putting in what it's for. Uh, you're paying for office supplies and software. Okay. Now, if you want to see the journal entry that is created behind the scenes from that form, you can look at your transaction journal. And how do you do that? You go to the More button and click on Transaction Journal. Okay. Now, you can use a check form if paying the bill immediately with a check. Like I was telling you, you can do this in expense, but the check form is designed specifically to write that check. Okay. Again, you would go create check, right? This is what it looks like. You put in the payee, what bank account you're writing the check on, payment date, and this check number, it will advance as you write your checks, right? You'll put the checks in the printer, and uh, you'll keep track of the numbers. But you can also override this if you need to. Let's say that you printed one and it got wet or something, and you have to print it again. You can override that. Again, uh, we know that because it's a check, that the credit is to cash. Well, what's the debit? Well, it's going to be here again, office supplies and software. That's what we bought. Examples of money going out that should not be recorded using a check or expense form include paychecks to employees for wages and salaries. There's a specific part of QuickBooks that we use to handle payroll. And if you go outside that system, it will really kind of mess up your withholdings and all that. So paychecks, you've got to do within that payroll system. Same thing with payroll taxes and liabilities. You're going to do it within the payroll system. Another one is sales tax. You don't pay your sales tax with a check or expense form. There's a system there that keeps track of your sales tax and the payments of those sales tax. And finally, bills that are already entered in the bills on-screen form, you shouldn't do that because when you're paying a bill, you're reducing your accounts payable. So there you have to use that system. You know, you record the bill and then you pay that bill. In that system, it keeps the accounts payable correct, right? Okay. Now, we can connect our bank accounts and credit card accounts with QBO. No, we're not going to do that because, you know, we don't want you to connect your own bank accounts to QBO. Why? Because Mookie is a fake company. But if it was a real company, you would do it. And the book tells you how to do it. And the advantages of it is that uh, all the transactions on the statements are going to flow into QuickBooks. They'll be automatically downloaded uh, to QuickBooks. And then we can rather uh, match the transaction from that statement to the transactions that we recorded. And that's going to happen most of the time. So when you get those transactions from the bank into your system, QuickBooks is going to kind of get their best guess. Is this a match? Is this what you're talking about? And what you'll do is you'll just go match, match, match. What's really cool about the chapter is we're not trying to make it hard on you. So they're all going to be matches. Okay. Now, if we're not going to uh, if you're not going to hook your real bank accounts, how are you going to get those transactions from the statements into QuickBooks? We're going to do that through an Excel spreadsheet, and you're going to upload that Excel spreadsheet, and I'm going to provide that for you. Okay, so to upload your transactions in your textbook, it says go to the navigation bar, transactions, bank transactions. But as we know, the navigation bar is gone. So how do we do it? We use accounting and then bank transactions. It will take you right there. So this is the new way of doing it. Okay. Next, what you're going to do is you're going to upload that Excel file that I gave you and drag it here. And then it will upload it for you. Then you follow directions, right? Well, where do you get your transactions to upload? Let's see the next slide. There's a line item in the Chapter 4 module that says you'll need these data files for chapter and exercises 4. So here are the three um, hyperlinks that you'll use. These aren't live. This is a picture, but in your Canvas module, you can click these and download your Excel uh, files. And what you'll do, let's say if you're working on uh, the C4.3, the credit card, you download it and then drag and drop it right in here. Okay. If you're doing EM 4.6, download it and then drag it into here. Okay. Now, when you drag it into here, what's it going to look like? it's going to tell you that there are, in this case, three uh, unmatched items, right? So these are the three unmatched items. Um, so QuickBooks is anticipating that and matched uh, the bank statement to a transaction that it believes it probably belongs to. And if it does, that's great. Just accept match. You hit match, 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 and then you're done. It's great. Now, it won't happen in this chapter because we're trying to make it easy on you. But if there were some transactions here that uh, QBO couldn't get to, and they don't know what it is, well, then you can add those transactions, right? Transactions that have not been entered in QuickBooks can be added. So when you do that, you have made sure that all the transactions on your bank statements have been entered into QuickBooks. Now, when you get to EM 4.8, there's a quick check. And this quick check permits you to verify the general ledger account balances for your Mookie company. If your GL account balances do not agree with Connect, then investigate and correct your account balances. And I can help you with that. So I have a lot of resources. So if you can't figure it out, just let me know and I'll help you out there. You know, they say see Appendix A for assistance with troubleshooting. Uh, I never found this very helpful for me. So I would just say if your account balances don't agree uh, what they should be, then if you can't figure it out, contact me and we'll work it out. Okay. But do not proceed until you have corrected your GL balances. And finally, here in accounting essentials, we're talking about banking, and it discloses like, well, a business needs at least one business checking account, right? And I'll tell you, if you had employees, you'll need another checking account just to write your payroll checks. And your business should establish a business checking account separate from the owner's personal checking account. That's just good accounting controls. And then you learn that in Accounting 4A. Now, traditionally, we do bank reconciliations to assist us in finding errors. And, until QBO, I taught how to do a bank reconciliation in QuickBooks. When we went to a QBO, they prefer using the match system, right? So where you download your transactions and then match the transactions, and you do it on such a frequent basis, you don't need to do your bank reconciliation once a month anymore. Okay. All right. Well, that does it for my video lecture for uh, chapter 4. So I want you to get busy and study hard. Bye bye.